of HDFC Bank, thank you for talking to Bloomberg. Shall we begin with the Indian economy?
Sure.
Now, the central bank's just come out saying growth is going to not be quite as fast as it hoped, more 7.2% than 7.4%. What worries you? What are your concerns about the Indian economy at the moment?
See, I think has there been some slowdown? Yes. Will we be there somewhere between a 6.9 to 7.4? I think that's a fair assumption. Economics was never a very exact physical science, so somebody's got to be right, but I think that's a pretty good growth rate.
And out of the various imponderables hanging over this, one thing people always talk about is the bad debts and banks. Now, you've done well on that. I looked, and your bad debts, gross bad loans are 1.36% against over 10% for the industry.
Yes.
What did you do differently?
I think what we did was a very clear definition of our target market, risk, reward, and constant monitoring if any of our fundamental assumptions were violated, i.e. either the margin went down or our default rate went up. And based on that, and we strongly believe in good old banking, I give you money, you give it back. And we need to So I think to some extent what happened was, at least for the large NPAs that accumulated, was probably less than optimum assessment of the capital project risks.
Is that an oblique way of saying the state banks weren't very good at this?
I will leave it at what I said. I said that we didn't do that because we didn't find the risk-reward matching.
But by most measures, there is a massive gap between the private banks such as yourselves, which have quite low non-performing loans. Once you include all the state banks, it
Yes.
jumps a lot.
So did we need a lot of improvement in the state banks? I would have to say yes. Have we made progress? I would say substantial progress. So if you see what the regulator has done between recognition, one, it did an asset quality review. So we've recognized our past sins. Two, they set up mechanisms for faster recognition of problems. Three, they set up the bankruptcy code, and that some people had started thinking they didn't have to repay the bank loans. Four, they moved in terms of changing their inspection basis. Five, the government is moving in terms of consolidating the public sector banks to reduce the risk and improve better, because obviously State Bank and Dena Bank are not the same.
Do you think the election makes any difference in this? I'm not asking you to rate Mr. Modi or Mr. Gandhi, but would there be a change at all if we were to switch from the BJP to Congress in terms of how banks are treated?
The good thing in India is once things are in the public domain, it doesn't matter who's in power. This will achieve its natural course. So I think if your question is whatever is in place for the financial sector reforms, as well as processes, plus what is required going into the future, will that continue? My answer would be yes.
And is there one particular financial reform you'd really like to see?
Well, there are a couple of them. I think we need to have a debt market. I think we must understand that liquidity is definitely important. Other than that, I don't think there is that much, but that debt market says a lot.
If you just push on the debt market, that would mean India having a capital market more similar to
yes,
America.
And
say.
Having a capital market with an interest-free yield curve with so that we can have what we call the bond currency and derivatives. So I think that will have to come about. They're working on it, but we do need that if we need to finance properly where the long-term financing should come from, where the short-term financing would come from, which needs a very clear look from ground level zero as to where the funds are going to come from, what are the assets available, do we need any reforms in our regulations, and I think that's in the process.
As long as I've been coming to India, which is sadly a long time, people have been talking about the idea of an Indian capital market. And one theory is that banks, such as yourselves, are actually quite happy with the current system because it means you're the only game in town.
That second theory I don't agree with because I can't make a lot of money that I would make in derivatives, and we are a major participant in the capital market.
You think it would be better for you if there was
I would think so, yes. It would also allow us to manage our risk better and introduce more products.
Can we talk a bit about other forms of competition? Well, you've had all these non-bank financial companies, and they have not always been a great success. You have IL&FS, they blew up last year. Is that mess being sorted out? When roughly do you expect that to be sort of finished?
I think the NBFCs, and I think it's recognized here,
That's non-bank financial companies.
non-bank finance companies actually needed to have regulated themselves better. But now the regulators are coming and putting in place. What happened was they had an asset liability mismatch. They didn't have a liquidity cushion. And they probably needed stricter inspection. So what has happened now is we at one time had a crisis. Now I think the crisis has gone. Problem still remains. So two things are happening. One is the banks have tightened up. Two, the regulators have tightened up. Three, these companies have slowed down their growth. Four, they're trying to dispose of assets and get rid of the asset liability mismatch. Despite all this, there will be some...
Did you have a kind of end date for that?
I would say within the next 12 to 18 months.